Welcome to TradeTheNBA.com. This is John. This report is for the 27th. Well, Friday produced a little bit more action, and actually we failed to hold up above the ABM yellow for the first time in, well, quite a while, since we had the resurgence of the shakeout on this secondary pump where we made higher highs, but on a higher shakeout, at least for the ES. Wasn't quite the same, and a little bit stronger DOC spread here, so there was a little bit more profit taking. Not significant enough, though, to break down below 76%, or even the green and or lower ABM levels. So, yes, absolute weakness. We do have a full DOC steel reset. We're still in rising gold. The real question here is looking for the next move of the shakeout. Any tick back higher from the histogram that we're looking at would certainly produce the next push to the higher level. And that's just something we're going to see over a period of time. And so, as I was pointing out, the weaker NASDAQ, because it had dipped below the negative 13.5 with the steel, so much more dramatic drop of the shakeout within that DOC spread. And that took place earlier and below the ABM yellow, and as well broke below even the ABM green. It did pop back and close above it, and that's exactly kind of what it's finding support, actually, right here on the NASDAQ as well. Currently, we're still not seeing a dip below the red line from an extreme histogram standpoint, so there's not what you would call a profuse amount of selling. This massive skyrocket of the euro is expected given the dip of, just the massive amount of U.S. currency that's just being thrown into things. The U.S. has got $1.8 trillion, and they're supposed to spend it in the next 3 months just in this massive... it's not necessarily a giveaway, because what you're doing is just replacing incomes, but it can't really be sustained. And the fact that Europe has been more open in general has certainly boosted prospects towards, at least the opportunity for a return in Europe. But the devaluation of the dollar is just evident in what we saw from gold. It hasn't materialized in oil, and that's telling you that the economies are still not moving. Plain and simple. So, despite the fact that you're seeing these moves in either markets and or currencies as well as in commodities, is a reflection of this potential hyperinflation, straight out of post-Depression Europe, really, or even post-World War II Germany construct of just a massive flood of dollars. Now, the difference being is the U.S. reserve currency is still used predominantly around the world, so the desire for U.S. dollars still is significant. But should any of that start to change, should you see a large-scale move towards transacting certain commodities outside of U.S. dollar, then that could change dramatically. But this is something we've called for quite some time, and it's just becoming more parabolic as people realize the realities of it. Now, from a market standpoint, intraday on our 5K chart, we saw plenty of good range selling in between, as well as buy configurations. So every time we ended up with our orange setups, and what we find particularly within these orange setups, and something to note, is when you're getting the Power Mode 2 confirmation that matches them, they tend to do better than when you get a weaker signal where it's come later. So here you ended up, matching the signals, you get the good move. Over here, not quite the same. You don't have a power lifting of the Azure line with the crossover signaling, and it creates a soft move, and that's exactly what happens. It ends up fading a little bit. It's where you have that more dramatic turnaround point that really has more emphasis to it. See, and it's likewise right here. So this is certainly a consideration that I'm putting into some of the updates on the programming for Power 2. Hopefully we can eliminate some of those softer setups where it would still signal the candle. It's just that it would also flip earlier on a weakness configuration, simply because it would note that it's not the strongest of signaling. What we ended up end of day, it was fairly decent along this bottom path here if you look where we weren't dipping below the red line. So the lows that were made weren't required to be retested in any way, shape, or form, except for the last one at the end of the day right here. And that filled in the post-market, but as soon as it did, you ended up with your crossover right there, along with the dip of orange, and boom, we took off from there. And then we just recently had a little bit of fill back. We had two positive extremes, and that still has a little bit more fill to do, so I would look for just to move all the way back to the 32 roughly, should we see extended weakness. But typically in this move you make an attempt back to that 100%, and then it's a question of if you can break it, we'll move forward. Otherwise you'll move right back down to this lower range, and that's pretty much what I expect to see from it. And I think that really getting good definitions from what are successful and high probability pushes forward using the power mode with the DOC, and really gives us a cleaner idea of how to view those. So hopefully you'll take that into account. As always, though, I will put up relevant items on the Skype chat. Trade well, and talk to you later.